You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo. Happy, thankful to be back in the old hosting seat. I was struck low last week. I don't like missing a show if I can avoid it, but it was unavoidable. I was in no shape, listeners, to be anywhere near a microphone last week. But now I'm back and ready to talk some volatility. Hopefully you guys are as well. A lot of fun vol popping off this week across, kind of pick your asset class. Of course, got the broad indices and the ever-evolving dance to the downside from a vol perspective. You got a little thing called Bitcoin, maybe, just maybe showing a little bit of volatility. You got them continuing to squeeze all the vol out of some of the commodities out there. So kind of pick your poison. There's a vol story to be talked about. Of course, you guys can always join us live every Friday, noon Central, 1 p.m. Eastern, via the old Mixlr. So if you say to yourself, I can't be bothered to wait for the old podcast version. I want it now in my ear holes, maybe while I'm working or working out or commuting, whatever it is you're doing at this time, having lunch maybe, then by all means, join us there. We do love to hear from you. If you're in the live chat and you got a question, maybe we'll bump you up the list a little bit. So always fun there. And of course, however you listen, live or after the fact, if you listen after the fact, make sure you guys can hit us up too. We like your questions too. Just hit us up the usual ways, social media at Options on most of the big platforms, or head on over to the website. It's all there as well. Questions at the Options Insider, the website feedback form, all that good stuff. Also the mobile app. You can ask us questions there as well. And joining me on the old program today, we got a fun crew to join me to break down this penultimate week here from a volatility viewing perspective. And joining me, it's the first time I talked to this guy in, God, almost a month. He's been all over the place, and then I was on death's door, but we're back now, I believe, in the same time zone. Mr. Russell Rhodes, formerly the corner office man over there at the CBOE, now kind of the man about town / institutional dude over there at the CBOE. Mr. Rhodes, welcome back. And are you indeed in the same time zone, or are you off in the darkest, deepest forests of the Urals?
I am in the same time zone, but a different area code. I'm out in 630 at home in the western suburbs today, anxiously awaiting the arrival of Dusty Rhodes, the senior Rhodes in my family, who's flying in from Memphis for the holidays.
Does he go woohoo all the time when he shows up?
Oh, my goodness gracious. He's got all kinds of antics. Plus, he was ugly Christmas sweater before there was ugly Christmas sweater.
It was just Christmas sweater to him. It was just fine Christmas wear to him, then you're saying.
Yeah.
Well, there you go. So you're not in the same area code. We won't hold that against you too much. And we're speaking area codes. This guy's way the heck off. I'm not sure if they even have area codes where he is, listeners. He's on the fringe of civilization. He's bordering Canada, a little region some folks like to call Canada. He is, of course, the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How go things in Canada, sir?
Canada is fine. It's hard to beat the lead-in with somebody called Dusty Rhodes. I mean, what that name is right out of Nashville. If you heard of a country singer, you would be, what's your name? Dusty Rhodes. Oh, you must be a country singer. So I was good. Life is good. Life is snowing in Maine. It is becoming quite a cold and frosty winter, as is the way at this time of the year.
There you go. We got our Dusties and our Rusty Roads and everybody else's, wrestlers and country folks and all sorts of fun stuff gathered together. So let's do it. Let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do pretty much what the name implies. We review the week that was and indeed still is from a vol trading and trending and development perspective. Interesting conclusion here to the holiday week. Well, not really this holiday week. It's more next week, which is the beginning of the series of truncated holiday trading sessions. Of course, Monday, everything's closed, including our shows for the Christmas holiday. So be that as it may, be that in your mind here as we're coming into the end of the week. And surprise, surprise, we're seeing most of the major indices sell off slightly here to wrap up the week. Most of the major indices off about 0.25% or so, somewhere in that ballpark. A little bit of red on the screen means even with this holiday coming out, the VIX Cash still taking a bit of an inhale here to end the week, just shy of the 10 handle, 995, as we're rolling on here with the show. And before we kick things off, Mr. Rhodes, and we dive into all things this week, you got to really quickly just give us a nice in-depth overview, if you can, of all things RMC Asia. Go.
It was a lot of fun.
I'm just teasing, Mr. Rhodes. We all know he did that in depth, ad nauseum, shall we say, last week. But no, it has been a fun week, Mr. Rhodes. Kind of pick your poison, like we said. It's been across the board. We'll start, as we are wont to do these days, in VIX and index land, even though there is some other vol to be found in other places. But, you know, it has been that perpetual dance. I feel bad. I was sick last week, so I didn't get a chance to play in the crystal ball. So I am excluded this week, which is the first time pretty much, I think, all year that has happened. So I don't think it's enough to derail my inevitable victory in the crystal ball this year. But it does go in the no contest column for me this year. But still an interesting week. As I said, we're still hovering, just flirting with that double-digit level. What's been catching your eye this week from a broad index vol, a.k.a. VIX perspective, Mr. Dusty Rhodes?
Mr. Dusty Rhodes is on a flight from Memphis right now, but his son will take a stab at that one. Just lots of quiet. You know, I mean, I think we'll get into what happened on settlement Wednesday morning for the December contracts, but just continuing to hover under the 10 point or 10 level. The thing that continues to hold up is VVIX. VVIX in the 90s makes you think that, and you can see it in some of the trading activity, that people are still getting getting some long volatility exposure and keeping the implied volatility of VIX options up. You know, that VVIX is driven by the call side, and people are still paying up slightly for the calls.
Why would people do such a thing, paying up slightly for such calls? It's just pure madness, sir. Speaking of pure madness, some might say living in Canada would be such pure madness. But aside from that, sir, you have your ice rink, you have all the other fun stuff. So you're content over there. Now you have all day free. Free from the strains and bonds of civilization to focus on nothing but volatility in the markets. So what has been catching your eye this week, Mr. Rock Lobster?
Well, a couple of things. Jan Vol, I've noticed, Russell was just saying about VVIX. This morning we were talking with a client. I'm looking at 78% vol average in January, which was kind of low. So that's amazingly low for not only is VIX Cash low, but the vol's low. It's sort of just in that term, for whatever reason, it's kind of hanging out right before earnings. It's remarkably accessible. I was actually looking at buying some strangles in there. I still got to decide here by the end of the show what I want to do. But the next thing is with as low as VIX is, how tight the futures are wrapped around the cash. Like there's no extra premium in the future at all. Like VIX is 10 or 9 and 3/4, and the futures are just like right on them at value. Nobody is putting any premium. I mean, the January future is like 11.30. There is no extra bid for future juice. I mean, it's very normal considering VIX is at basically all-time lows. So there is people, instead of buying VIX juice, they're either buying Bitcoin or they're buying Christmas presents because they're not buying a whole lot of future premium, at least for what I can see. So I thought that was one thing. And also the kind of the buy the rumor, sell the news on the tax thing, through almost that whole thing, I think we had one shot at VIX hit 12, I think, for like 5 seconds. And so the market really thought that this thing was going to pass, it looks like. And I'm a little surprised we didn't kind of make that last crushing drive to 2,700. And, I in my mind, I see 2,700 SPX, VIX 895 on December 29th. I think I see that as a number. And also, I don't think if we mentioned I think we had an 875 close for settle for VIX this week.
Yeah, Dees was 875. Yeah.
Is that all-time low?
Yes,
settle?
It is. Yeah.
And like I said, the Greasy Meatball did a very good job of managing our fund through that. So give him a little some props for that. And that's what we were looking at. We actually thought, wow, we could see this crazy settle. So we took our dollars and ran, which made us happy. But it's, when you're looking at volatility and looking at lows, it's important to see things print a low. And it puts the number in people's mind that it can get down there. So if anybody out there thinks they could squeeze a little more juice out of this vol turnip, there's a little bit, but there's just not a whole lot. So it's one of those, we're kind of sitting on the bottom of all sitting on the bottom, and we're not doing anything to lift because, as we have said, our single digit vol president is somehow keeping the vol at a single digit. What are you going to do?
That might get up there for my tortured vol metaphor of the year, squeezing the vol out of the vol turnip. Is that what you said?
I think squeezing the juice out of the vol turnip.
Wow, you've been watching too many old reruns of The Office talking about Dwight and Beats and all that fun stuff. That might get up there for our tortured volatility metaphor analogy of the year. But you're right, we did have a historic settlement, I think 875 it was. So that's just funny to me, considering how many times this year we asked our audience if we would even see a 8-handle intraday, let alone settle there, and to have that and pretty much every time there's just no interest in it. Not going to happen. A small, negligible percentage of the audience. I think the last time we talked about that was probably about a month or so ago on our many and various Twitter polls, and lo and behold, we see it as a settlement. So interesting stuff how this year has arose. Speaking of this year, it's been a fascinating one. You and I touched on this a little bit yesterday, Mr. Rock Lobster, on the option block. And next week, which is our ultimate show of the year, our final show, we'll do kind of a more, I think, extensive look back from a volatility perspective on the year, some of the trades that really caught our eye, some of the big trends, some of the big developments, things that were going on. I think we have actually have a listener question to that effect today. So we're going to punt that on to next week because you hate to do it 1 week left. There's something crazy could happen next week. You never know. But as that said, there is a lot of data flying around this time of year, people looking at different things and kind of looking back on the year in a lot of interesting ways. And it has been, I think, to call it an outlier year is being charitable. It's kind of off the charts, pretty much however you looked at it. You joked about the single-digit VIX, and we were joking about that yesterday, Mr. Rock Lobster. But yeah, if anyone had come on my network this time last year or the beginning of this year and told me we would see what we saw this year, I would have laughed them off the network and probably never invited them back because they were a loon. They were a crazy person. And lo and behold, we see VIX throughout the year, one of the most days under 10, I do believe, in the history of VIX. In fact, I'm looking at the chart right now. Yes, the days in the year, I think this came out of Bloomberg. Days in the year, the VIX under 10. We have, I think this probably might be a week or two ago, too, so it's probably even dated now. It's even probably north of 50 now. At the time of this graph, it was about 47. The next closest year is about 1995 or so with 5. And then 2007 had 4, looks like, on this chart. Days in the year, VIX under 12. We have 200 north of this year. Next closest is going to be back 2007 2008 time frame with about 140 odd, and back in that same early to mid 90s period with about 100 or so. So yeah, we're kind of outliers. Pretty much however you look at it. Of course, at the time this was compiled about a week or so ago too. This number is probably a little dated now too, but at the time it was 61 new record highs since January, and the S&P is the third most since 1952. Of course, the index up over 20% since that period. So if you think, rally ho and low vol, what does that mean to you? If you're an asset manager out there, it probably means a good Sharpe ratio, and that's pretty much exactly what we saw this year. I think FT actually calculated it and said we're in the 99.7, it's actually the 0.3 percentile, so we're better than 99.7% of other times effectively since 1900, since modern data has really been counted in terms of Sharpe ratio, so risk-adjusted returns. And if you're saying to yourself, FT in that same piece also breaking down obviously a lot of different ways you can measure volatility in the markets. We like to talk VIX, of course. VIX is one way you could do it. You can also just look at the actual movement day-to-day of the S&P, and that's what FT did. That's about they said it's about been 0.31%. So far for 2017. I think this is through late November, so that number may have evolved a little bit. But that is the lowest they've seen in terms of daily average change in over 50 years, actually. Got to go all the way back to the year after John F. Kennedy was assassinated to really see anything of its ilk. And that was 0.25%. And of all the years they calculated, the index has been averaging about 0.72% a day. So we're pretty much less than half of that this year. So pretty much just by any means you want to look at it, net return on the index, risk-adjusted return, volatility or perhaps lack thereof, this has just been a historic and kind of head-scratching year. Again, Mr. Rhodes, we're going to save our full kind of VIX-related look back for next week, but just some thoughts on looking back at the macro environment and kind of just the crazy outlier year for volatility that this 2017 has been so far.
Well, the market, everybody's criticizing poor VIX for being low, and people are starting to think that they're going to come up with alternatives, which I think is just great. But, VIX has done a hell of a job predicting what was going to happen this year, and that's what VIX is. It's a forward-looking measure. And, the realized volatility has been, as low as it's ever been since we had VIX. Going back, going back before I was even a twinkle in somebody's eye. So, VIX it's done what you would expect. Now, like you said, if somebody had been on the program this time last year, especially as we're mentally bracing for the first year of a Trump presidency, absolutely nobody predicted what was going to happen this past year. But what I love is the people that are predicting for more of the same in 2018.
Yeah.
I mean, that's the one that really gets me. That's the one that gets me going is we should just see more of the, which, is probably how I should play the crystal ball. I should just pick wherever we are at this moment. And that would have improved my record from 2 wins out of 52 weeks.
There you go. Well, it's such an outlier year, so of course that means we have to be able to see it again next year because that's easily replicable.
That's exactly right.
That's how statistics works, I do believe. But you're right. It is funny. Usually when we see these kind of weird outlier events, the .com crash, whatever, there's always someone who raises their hands later and said, "Hey, I predicted that. Look at me." And they have some data going back and they try to use it as they're some sort of market guru, skeptic, prescient to person, and we're not seeing that with this. No one in their right mind came out this time a year ago and said, "Hey, I predicted a year of record low volatility across the board due to Trump." No one in their right mind said that, and no one is going back and saying that about themselves because it makes them look foolish. So yeah, it's a weird moment. Speaking of weird moments, Mr. Rock Lobster, we kind of touched on this yesterday, but any additional thoughts on just what an outlier year it has been from a broad vol perspective, sir?
It's one of those things where it's probably not going to happen again. I think it sets up an interesting year for next year as far as I think we'll get more aggressive vol selling at the beginning. And I think it'll end up being an opportunity year for actually buying juice. Even this year, even you would think like, VIX was so low. You bought juice, you got hammered. The market was so sort of unidirectional that, especially for my clients, a lot of them that were kind of long-term juice buyers did very well. Mostly just we kept going up and we never really sold off. When we sold off hard enough where they could dump some puts and stuff like that. So it is. I think we'll even be more so next year. But I think what we had this year is kind of unique, mostly because I think a lot of the situation was unique. My guess it will be more politics as usual next year. We also have, for the first time, rising interest rates again. So, and I know that the Fed is being real measured, but don't forget that I think last year was probably, it was sort of the tail end of the really low rates. Europe is going to have to start pushing rates up and stuff like that. So, I think part of this vol, and maybe Russell could speak to this a little too, but I think part of the low vol is we had just really, really low interest rates. And that tends to kind of cushion equity movement. And if we start getting back to a regular interest rate regime, and there's no reason why interest rates should be zero right now. I mean, economies are growing, everybody's kind of bullish. So I think it's time to bring some volatility back and at least just get some interest rates back to normal. But I think that's it. You always look for kind of what would be the underlying reason, and that in my mind is still, 0% rates in Europe has given a super low vol. It's a little bit, it kind of boggles my mind a little bit, I have to say, even though we are starting the unwind process. So that's my closet, observation for 2017. I don't see how the rates could be lower than they were this year. So things should change a little bit.
The rate that, we were joking about RMC and how I covered it all kind of last week, but our keynote, who gave a macroeconomic look at 2017 and looked forward to 2018, he talked about QE, but he talked about it a little bit differently than we do. He talked about it globally, since I was in Asia and all. And he noted that although we're starting to, that we've tapered and we're actually reducing the balance sheet in the U.S., that Japan, the UK, and the ECB will not reach that point until 2019, and on net, we'll still have global quantitative easing through 2018. So there's an argument of more of the same for next year.
Wow. So we could have another year of this.
Yeah, that's just putting what you were just running through and what he had said together. Yeah, that's so now I am predicting more of the same in 2018.
Holy crap! Buy the dip.
There we go. Russell, the omnipresent contrarian indicator here on the show, listeners. See, I love that. A nice little change of mind about face in about 5 minutes on the show. So you get a lot of fresh hot takes here on the show. Speaking of hot takes, let's get to the hottest and the freshest, because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, you guys know the drill. It's time for Mr. Rhodes to hold court wherever he is, the deepest forests of eastern Russia or Hong Kong, or perhaps in his garage. Wherever he is, it is time for him to hold court on all things weekly VIX options action. Mr. Rhodes, have at it, sir. The floor is yours.
Oh, crap. Where's my notebook? Oh, here it is. Okay. I took lots of notes as we worked through the week. And I'm not doing this segment again until you send me that impact. I want that recording so I can play it when I start teaching everywhere.
So you can torment your children with it? Is that what you want it for?
I want my intro. Actually, I want to play it for Dusty.
All right, so I think we can make that happen. A little early holiday gift for you, sir. I
go on strike. All right. Monday. One of the first trades of the day was using the weeklies. Somebody bought 100 of the Jan 3rd 16 calls for 20 cents, and they sold 100 of the Dec 27th 21 calls for a nickel, paying 15 cents. Expecting calm next week, which, it's a holiday week, blah, blah, blah. And even a Bitcoin crash can't get volatility going. So kind of a smart trade, maybe looking for an increase in vol or some sort of jump in the first week of the year. Somebody also came in and sold 100 of the Dec 27th 9.5 calls for 10 cents. And they bought, you know what? These are the puts. They sold the 9.5 puts for 10 cents, and they bought 100 of the Dec 27th 9 puts for 2 cents. Now, keep in mind, they did this before we got the 875 settlement on Wednesday morning, but looking for a settlement maybe next week above 9.5. Somebody bought on Monday 1,000 of the Jan 3rd 10.5 puts for 55 cents, just outright. Looking for a Jan 3rd settlement under 9.95. Probably not a terrible idea. And then somebody in several lots on Monday, they actually sold a couple thousand of the December 27th 1350 puts at 349, and then they bought, and I don't quite understand the idea here, they bought the same number of 9 strike puts that expire on the 27th for 3 cents. Looking for any settlement above $10.04 results in some sort of profit with that. On Tuesday, somebody came in and bought an awful lot of the January 3rd 11 puts for 75 cents, and then they went out to the standard January expiration, the January 17th 11 puts, and sold those for $1. They took in 25 cents. Probably hoping there's some value in those January 3rd puts. Again, maybe a beginning of the year rally, low volatility, whatever. And then, they're short the 11 strike puts. January 17th is actually after the MLK holiday. We will have all of that holiday effect out of the way. Maybe that's part of what they're thinking by being short the 11 puts for $1. Finally, and I say finally because Thursday and Friday have big goose eggs next to them, somebody came in and bought a couple hundred of, I think 300 of the January 3rd 10 strike puts on Wednesday. They paid 33 cents. And then they sold the January 3rd 9 puts for 3 cents. They paid 30 cents. Any settlement below 970, that works fairly well for this trade. Could not find even a small trade of interest or uniqueness on Thursday or Friday in the weeklies. I think we know that entering the holiday that volume's going to taper off a little bit. So I know that I did not fill all of my time, but that's what you got. I can't make stuff up.
I budgeted another 18 minutes for you, sir. What are you doing for me? All right, I guess I'll have to dive in here. and show you how it's done, sir, even though it's been a whole year or so since. And here I am giving you early Christmas gifts in the chat while you're talking. This is how you reward me. This is how you thank me. All right, I shall remember that, sir. And Russell is right. It's not exactly a rock'em sock'em robots out there in all things mothership VIX options either. We're averaging these days about 715,000 contracts a day. Today, so far, a little more than halfway through the session, barely a third of that on the tape, about 250,000. So it doesn't look like we're going to be blowing the doors off volume-wise today either. Pretty much most of the week, you can kind of make that argument, except, of course, for earlier in the week on Tuesday, where we saw nearly 1 million contracts hitting the tape. Yesterday, 273, another anemic day. Wednesday, 581,000, and Monday, 833,000. So Monday and Tuesday, fairly decent days. The rest of the week, as you might expect with approaching a holiday like this, people heading for greener pastures, seeing a lot of data right now. Today is going to be a crazy one in terms of travel through Chicago. People may be trying to get an early jump on that. Either way, not exactly rock'em sock'em robots. VIX call to put, I should say, kind of creeping back up there. I can see Mr. Rhodes, if this was a video show, he'd be dabbing his brow of perspiration because he'd be nervous right now. Once it gets in that 4 range, he starts to have labored breath and get a little concerned. And it is exactly 4 right now. So for all of you out there who are devoted watchers of all things VIX call to put, there you go. Little creeping north action for you. Read into that what you will. Let's break down the hot VIX strikes, the number 1 biggest positions right now out there in VIX land, what people are actually slinging out there. And you can pretty much probably guess the 1, 2, and 3 because it's the same. The months change, but the strikes stay the same. It's, of course, this same VIX three-way trade that was traded first a few months back and, of course, has been rolled several times now. But it's that same 15-25 vertical with the 12 puts kicker, and of course it's got a bit of a ratio on the upside there, which makes it interesting, I think, to say the least. So number 1 with the bullet is, of course, that upside, the 25 strike on this kind of ratio vertical trade. 616,000 of those bad boys open over there. Number 2. The 12 puts, again, the put leg of that three-way trade, about 440,000 contracts open there. It's just those two strikes alone, over 1 million contracts right there. That pretty much dwarfs a decent smattering of the entire rest of the options industry in terms of OI, just in those 2 strikes. Number 3, the Jan 15s, about 400,000 open. There again, the third leg of that three-way. Then we get into some new material, some new action here. Number 4, the Jan 22s, 367,000 contracts open. Number 5, the Feb 22s. I guess 22 is where the action is this week. 313,000 contracts open over there. Number 6. Got to go all the way down to number 6. We're still at 300,000, so it's just a pretty hefty action on these top strikes. You got the Jan 20s, exactly pretty much 300,000 open, 300,098 to be precise. Number 7, the Jan 16s, 251,000. Number 8, the Jan 18s, a whopping 231,000. Number 9, the comparatively reasonable Feb 15s, 207,000. And winding up, wrapping up here, the top 10, the Jan 17s, 203,000 contracts. OI actually a little bit shy of where it's been of late, about 9.4 million contracts, about 1.9 million on the puts, and about 7.5 million on the calls. Before we dovetail away from all things VIX options, Mr. Rock Lobster, I know you like to watch it. I know a lot of your hardcores in the pit chat like to watch all things VIX options. Anything catching your eye out there from an activity perspective this week, sir?
The biggest one really was that just the general action around the puts around the settlement. There was just a lot of action around the 10 puts, 9 puts, 9.5, like stuff like that we were surprised on. So that was the D's 20 that's gone. So somewhere along the lines, people, they're embracing that lower vol, Mr. Longo. When it's kind of down there and it's looking kind of low for the week, they're really embracing that low. We also have where they were going to sign the deal, on a Tuesday and you settle on a Wednesday, and that just, and they index marked up a little bit, and it was a VIX mark annihilation. So there was some, I think there was some healthy betting around that low settlement. I'm just getting that feeling.
Yeah, I think it seems like it. There's certainly that volume-wise, that those 2 days were the only real volume leaders we could point to during the week here. As I'm just finishing up this little tweet about what people want us to talk about next, I guess we got to get to it because everyone and their mother is just asking and looking. There's this little thing on a Bitcoin. I'm not sure if I'm pronouncing that correctly, but it seems to be capturing the minds and indeed the attention and imagination of just about everybody out there. I don't care if you're in the market, in the media, or if you're just on hosting some random, afternoon talk show. Chances are you're probably talking about VIX, or not VIX. VIX would be a good one, but also Bitcoin. I've infected myself. I'm saying Bitcoin now in my head. But it has been fascinating to watch. And today, lighting it up, of course, last night, we saw people, shall we say, coming in, hitting some bids over there across the crypto spectrum. A lot of them taking hits. But Bitcoin, of course, is the one everyone's watching. And, of course, the one we have a lot of listed contracts on. And Mr. Rhodes, you guys over there at the CBOE lighting it up today to the tune of over 10, looks like over 11,000 contracts, pushing 12,000 contracts over there on the XBT, which is, of course, the CBOE Bitcoin futures. So looks like, that first day was pretty active. That was about 4,200 contracts and change. That seemed like a pretty good day. Seems like we're dwarfing that today. So what's been catching your eye out there, sir? And, I guess if we're talking vol, it's kind of hard to exclude Bitcoin from that conversation these days, isn't it?
Yeah, I mean, the Bitcoin is very volatile. We added, it's really interesting. We added derivatives, and you tend to usually see a little bit of a calming of volatility when derivatives get added to a market, but that really has not been the case. It was kind of average when we added. Then a week later, CME added their futures contracts, and things have just gone a little bit nuts. I actually put a quote from a book that I worked on a while back, The Warren Buffett Way, out and kind of and tagged Bitcoin, where basically people will sell if they buy things because they don't understand them. They're going to bail out probably at the wrong time for the wrong reasons. And that's not an opinion, but I'm sure there are lots of people who have gotten into Bitcoin and have no freaking clue what they're doing other than they're buying something that kept going up. And then the other piece of it, it was really interesting. If you look at an intraday chart, a 1 minute chart on Bitcoin, which trades 24/7, you got a big old spike down as people were waking up in Europe, and you got the second spike down as people were waking up in the U.S. So I think maybe you got people that wake up and like, holy crap, what happened overnight? I'm out. And that was part of the moves that we saw, because the big spikes down that we saw today were like in the 7 to 8 o'clock time range here in Chicago. The final piece of it, and it's something that we've just been kicking around at CBOE, and there's nothing quantitative behind this one, and I think Andrew wants to talk about it as well, is all these different venues where you trade Bitcoin. They do have technical problems at times. There are dozens of them. And when you have an increase in volume, that is when they seem to be susceptible to some of these problems. I have a funny feeling if you wake up, you see that you can get out, and you see that there's a lot of volatility based on the experience of some of these things going down. You get out based on a fear that you might not be able to get out because of technical difficulties at some point in the future. So far, neither us nor the CME Group seem to have had any problems maintaining an orderly market in our futures, even with this excess volatility.
I'm going to add just a couple things, and I'm kind of a strong believer because I've been watching as a participant, and I know this is CBOE sponsors this show, but they do a really good job of margining. They've learned how to margin products over the years. And if I ever write a book on the financial crisis, I would probably say something if the OCC and the derivative exchanges actually cleared all those products that they all wrote over the counter, even though there was trillions of dollars in notional value, because everybody would have known what everybody had under their skirt. We wouldn't have had the financial crisis we had, because it was just a huge loss of confidence. The only thing that worries me about Bitcoin is how, when all of these what I would say unregulated derivatives exchanges, and they're like startup derivative exchanges, and all these prints are starting to go up. If some of these start just blowing apart, I don't know enough of the details, and I'm still trying to get more information on them. But I'm all for listed transparency. You go trade, do whatever you want, invest whatever you want. But I think you really, if this Congress wants to do something, they would push to just try to list more derivative products on exchanges that clear and demand, because there's a third-party system like the OCC for options that demand margin and demand that people put up margin and substantial margin for products. So I know the CBOE is going to push a solid margin requirement for the future. So is the CME. I'm in the back of my head, I go, if this unwinds, it won't be from the exchange's point of view. It'll be these off-exchange things. And the fact you can't get a whole lot of information on them, I'm finding troublesome. But that's just the risk guy in me. My little risk hackles go up. But anyway, we'll see how that plays out.
I started at CBOE right in April of 2009. So I showed up just as they were starting to push Dodd-Frank. And I've been really it's too late to say I still am, because it's all sort of past. But I was really surprised at how little got moved over to exchanges like CME Group and CBOE. I really felt like I was paying attention. I was spending time learning as much as I could about some of the over-the-counter derivatives, thinking that they were going to show up at my exchange any day, and that just never happened. I was kind of surprised that never happened.
I think that was a major blunder, because if you had any opportunity to, not a blunder on the CBOE's part, because I'm sure they tried, but trying to get that, trying to get more of that paper into a place where you actually were forced to put margin up, and that would so what some of the banks and some of the hedge funds and stuff made less money, but there would be a lot less of the shell game going on with clearing. And I think that was the perfect opportunity. And if everybody that invented that legislation really had half a brain, that's the first thing they would have done, because when there's transparency, you don't really have problems. If you have put up enough margin, there's not a problem. That's why the way Bitcoin is now, it's mostly been a cash thing. You give me your $18,000, or what is it now, $13,000, and you get what you get. It's when everybody comes in and starts massively buying puts on some fund that is long Bitcoin, and they blow out because they're leveraged, and it all just comes tumbling down. That's where, as we know, the issues happen. So that's just my little soapbox, but I will get off my soapbox at this particular moment.
Funny for a diehard libertarian living on the hinterlands like yourself, sir, to be such a fan of centralization. But you're right. That was the big impetus coming out of Dodd-Frank. We saw the creation of these entities called SEFs, swap execution facilities, as they're pretty much created whole cloth out of regulation, exactly to do what you're talking about, bring all this kind of unregulated swap, these kind of derivatives light activity onto centrally cleared platforms. It never really took off the way a lot of people envisioned. And you're right, it seemed like there was a huge impetus to move onto listed centrally cleared venues. And as the years went on, things kind of fell by the wayside. And we never really saw that mass introduction onto these platforms. A lot of people were, I know certainly the exchanges were hoping for, because there's a lot of volume that goes up OTC that they would certainly love to have a piece of. Speaking of volume and having a piece of things and talking about all things volatility, Bitcoin tends to move. Mr. Rhodes has talked about it before. A lot of people have been parsing a bunch of different activity out here. Looking at, I think FT cranked it down about a week or two ago, showing the actual realized vol of Bitcoin compared to some popular commodity contracts. They were showing Bitcoin at the time. This is realized annualized volatility of it looks like about an 85 or so versus WTI, which at the time looks like about a 25 or so. Corn shy of 20. Gold at about 10. We know gold vol's been in the toilet for a while, and the S&P we know is even shy of that, about a 6 or so. And then if you're wondering to yourself, how fast does this Bitcoin thing actually move? Someone sent this in. One of our listeners. I'll have to check and see where they grabbed it from, but this data looks good, and it's got essentially how long it took Bitcoin to move and cross these different price thresholds. And if we go from the biggest move from pretty much nothing the early days up to past 1,000. Took 1,789 days, so around 5 years for all that to play out in the marketplace. To go from 1,000 to 2,000, about 1,271 days, so a little bit shy of 4 years. Getting a little bit more rapid on that front. 2,000 to 3,000, 23 days. 3,000 to 4,000, 62 days, about the same amount of time to pass 5,000. Only 8 days to go from 5 to 6,000. That happened not too long ago. We got 6 to 7,000, 13 days. 7 to 8,000, 14 days. 8 to 9,000, 9 days. 9 to 10,000, 2 days. 10 to 11,000, 1 day. 11 to 12, 6 days. 12 to 13,000, 17 hours. We're seeing a bit of a trend here. 13 to 14,000, 4 hours. 14 to 15,000, 10 hours. Hit the 16,000 level in 5 hours. Hit 17,000 in 2 hours. 17 to 18,000, 10 minutes. 19,000 in 3 minutes. And then to give a lot of that up, this was done when it was still about 14,000. It's shy of that now, I believe. But at the time, the night that high, which I believe was 19,666, all the way back down to 14,000 was 4 days. So put that in your volatility pipe and smoke it, Mr. Rock Lobster. Thing moves a little bit, wouldn't you say?
It moves a ton. Where are we going to price the at the money straddle when they list the options on this?
Everybody has been asking us that. Everybody, mostly on our TWIFO show, but we've been getting so many people asking us, what's the volatility skew going to look like? Someone wrote in last week, what are you going to price the 10,000? He wanted to know the July 10,000 put for some reason. That's where he was fixated on. But everyone's got their level and their price and their month and what the at-the-money straddle is going to be. And there are some quote-unquote exchanges out there that are pricing in that data now. Obviously, it's very sporadic and spotty, but there are some people attempting to crack that nut now. But I am looking forward to that. In fact, that does kind of lead into what our question of the week is here on the listener questions. I think without further ado, let's dive into some volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everyone's got Bitcoin derivatives on the brain. You mentioned the straddles, Mr. Rock Lobster. Everybody and their mother, since these futures were listed, have been asking us, when the heck are we going to see options? When are we going to get options? When are we going to get options? So we decided to turn the tables on you guys and ask you this exact question. We got the futures listed on both CBOE and CME now. So when do you think we're going to see options on these things? We gave you 4 pretty straightforward choices: Q1, Q2, Q3, or Q4 of 2018. Mr. Rose, as a designated CBOE person, you can recuse yourself if you don't feel like playing our fun party game. But Mr. Rock Lobster and I will dive into these dangerous waters nonetheless. I think I've said before, I think Q2 feels like a reasonable time frame for me, just because I'm sure they'd love to have it tomorrow, but we need to obviously have some volume on the tape. And also, there's a little bit of a regulatory thing that has to go into actually listing these options, so it takes a little bit. I think Q2 is reasonable. I think, Mr. Rock Lobster, you were on board with that. Are you still feeling Q2, or what are you feeling these days?
I'm feeling Q2 because I think if anybody can get it done, Russell can get it done and get that bad boy across the finish line. That's what I'm feeling.
So yeah, Russell, tell us, when are you going to get this done for us? I
am recusing myself. I love my job.
No fun. Well, what's fun is a job when you can be on a show and just say outrageous things that you need to actually deliver on. What fun would that be, sir? So yeah, it looks like, and let's see how our audience at the time. I know earlier this week they were really optimistic. They were saying Q1. Let's see if they're still on the Q1 tip. Yeah, it's lessened. People are starting to get a little more longer term approach, I think, but so down to 39% now. It was over 50 for a while there. 39% still saying Q1. 27% on the Rock Lobster and I's tip of Q2, and then a tie for 17% each for Q3 and Q4. So still a hefty amount here, over pretty much 2/3 saying we're still going to see it sometime in the first half of the year. So that would certainly be nice Let's see if you guys have thoughts on this. By all means, feel free. Got a bunch of you guys chiming in. You're in Rock Lobster's buddy, or you're in Meatball's buddy, I should say, Mr. Rock Lobster. This FContangotrader guy. He writes in multiple times a day with ideas for us and for the show. He's commenting. He said we should call our stuff option blockchain. It's not a bad idea. Option blockchain insider. He's saying. He says forget the Bitcoin. If you shorted VXX since 2011. Now you own an island at the Bahamas. If you own Gamma and hedge with vol products, now you own 2 islands. So this guy clearly in the short VXX train, and he's liking it. So he's saying, the heck with, maybe he's one of your pitch chatters. I don't know, Mr. Rock Lobster, but he does seem to like you guys too. He's saying forget all this Bitcoin hype. Just buy those VXX Jan 2019 10 puts, set it and forget it.
I think he is. He is one of our pitch chatters, and I think he does pretty well. So I can't disagree with him. There's opportunity all around. So you might have missed Bitcoin at $125, but there's always VXX. There's lots of ways to skin a cat.
Yes, there is always. So yeah, headline making stuff is not always what makes all the money. It makes the headlines, but you're doing all right if you're short VXX these days. I've been lamenting myself. I've been so busy doing other things. I was like, man, whenever we first split, I was going to get into it. And one of those things, you get busy, and you look away for a week, and next thing you know, it's already eroded 15%. And you're like, what have I done? But yes, you can make the same argument for Bitcoin. Javier's got a question for you, Mr. Rhodes. I have no idea. You can't recuse yourself. You can just say, I don't know. But he wants to know, another question everyone's been hitting us up. Is there a Bitcoin VIX from the CBOE? I can answer the first one. Of course, there isn't. But I think the question he's really trying to ask is are there any plans for this any time in the future?
It would come after options because you need options to determine a volatility index. So the plan would be get options up and running, get a good liquid market that you can calculate a volatility index from, and then move into that. So hopefully in time.
You like what I did there? It was kind of a backdoor way to try to get you to answer the options question. I'm stealthy that way. You got to watch out.
No, we've actually said in meetings and publicly that the next step is options. We just haven't put any time frame on that whatsoever. And it really is based on the liquidity that you get out of the futures. But I do think that and I know we've said this as well, if we list options, they will be options on the futures, not index options.
One would hope so, especially given the numbers you're putting up today. You got some liquidity to be able to put a nice option contract in. Yes, of course, Javier, VIX derived from the options. You got to have the options first, so kind of a chicken before the egg syndrome there. But once we get the options, hopefully the Bitcoin VIX will not be far behind. Jedi Guy says, what were your favorite vol events and trades from 2017? Great question. We'll probably get more into that next week. That's kind of our last episode of 2017. Then we can look back at some of the big trades that really caught our eye, some of the big trends, the big developments, and all the other hot vol action that really caught our eye from 2017. If you guys have a suggestion for something you'd like us to talk about in our great end-of-year wrap-up episode next year, send it in. We would like to hear from you guys. What do we got here? Taj Panasso. Kind of a question everyone's been asking. Will there be options for Bitcoins once the futures are traded? We just talked about that a bunch of times. Yes, there will be at some indeterminate date in the future. Hawkeye 618 from the live chat. I believe he's one of your pit chatters, Mr. Rock Lobster. He wants to know, what is 1,000 points in 2 hours turn into an annualized vol? I think he's talking about. The big.
I know who that is, and I'm gonna make him do that for homework in early July.
I was gonna say, do your own math, man. We're doing a show here. We don't have time to do your math for you.
And I'm gonna make him answer that question himself as part of the course he's taking from me at Loyola that starts in less than a month.
Oh, well, there you go. So get a little homework from your instructor, making you do your own realized vol calculations there, trying to get us to do your homework. For shame, sir. It's not what we're here for, even though it is fun. All right, we got to keep on rolling into our final segment. It is time to break out the second to last crystal ball of 2017.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. You guys know what time it is. Time for everyone to embarrass themselves recklessly and wildly, attempting to pin down the VIX for the coming week. Like I said, I was at death door last week, so I was not able to come in with my what would have been very prescient around a 10 handle, I'm sure. Instead, I allowed the meatball to have that fun last week, and lo and behold, he was actually pretty darn close. So he picked a 10. We got a 997 on my screen here as we're wrapping up the show. So we'll give the meatball that one. Russell was at a uncharacteristically close and fairly high 974. So two fairly good guesses there. And then our triumvirate co-host there, Bill from Valentine Ventures. He was playing the downside. I think he was playing the settle. He was at 899. So he was closer earlier in the week than towards the end. But still a pretty decent week. The meatball took it this week, but he is not here. So you know what, Mr. Rock Lobster, I'll be nice. I will extend that courtesy to you. If you would like to go first, sir, have at it.
I will, and I'm going to say we are going to get an end-of-the-year print below 9. So 899. Boom.
Oh, so you're stealing Bill's thunder from last week, I see.
I'm not. He's just some other guy. He's not me.
That's right.
he's just some other guy.
It's not like you're in his place.
Yeah. What the heck? It's me,
if anything,
man.
he was taking your place.
Yeah. Don't put that on me.
Yeah.
Well, you did mentor him in some degree, so I have to blame you for any of his faults in the volatility space. All right, Mr. Rhodes, you were next closest. So you get to go next. What are you feeling for this time next week? A weird time in the markets next week.
Yeah, with a long weekend and the 9.25.
Interesting. I'm glad I let you two go first because you're kind of right around where I wanted to be anyway. Well, actually, Rock Lobster is a little way shy of where I wanted to be, but I was thinking he was coming in at 10 for some reason, but he is actually at 899, stealing Bill's thunder yet again. But yes, I'm feeling a little bit more juice than the two of you guys, but not a ton. I'm going to go in at the old 965. I like that level. It's feeling good to me, and it's worked out well for me before. So let's see if I can bring home the year with one final victory in my old volatility pocket. All right, everybody. That music means, unfortunately, we've come to the end of another excellent, fun sojourn through the world of volatility. We talked this little thing called VIX. We talked this little thing called Bitcoin. We talked a bunch of your questions, which were mostly about Bitcoin volatility. We got one more show to wrap up the year, I should say. That's coming, of course, next week, so we won't be off next week. So if you have something you'd like us to talk about in terms of what was your favorite vol trade or event or trend or development, we're going to do more of a kind of a looking back episode next week. So if you got something you'd like for us to include in that, send it in and we'll parse it for you on the show. But before we go, one last time around the horn, let's start in, he's not in his corner office, he's in the Hinton, I think he's in his garage out in the burbs. Mr. Institutional Guy at CBOE, what's cooking in the land of all things CBOE, sir?
Starting to plan out trips for 2018, trying to get the work done that will make me or allow me to make you call me doctor. That's the two things that I got going on right now.
Oh, I'll just call you doctor anyway, just for fun. Just for...
Not like they can stop it.
Just for fun and indeed for profit. And Mr. Rock Lobster, same question to you, sir. What is cooking in the land of the pit?
Well, you will see the Vol newsletter. That will be my take on trading volatility pairs. I think we'll be the only one that does it. We've soft launched it inside of Option Pit right now, and it has gone very well. So if you want to learn how to trade in hedge vol, create volatility trades out of Edge, where the VIX options, futures, and the vol products are, where all that stuff lives, we will be the place. It will be priced. It will be priced to get people interested at the beginning, but I think you'll all like it. Look for that beginning of the year. Also, our VIX Made Easy class, which as my classes go, everybody's like, well, it's not totally easy, Andrew. So that will be launched. the class is going on now, but the videos will be ready for sale after the beginning of the year. And then again, look for stuff for Carmen Line because that's moving along. That greasy meatball is putting some. He's wearing the rubber off his shoes, running around Chicago for that. So lots of good things coming out of the option pit world in 2018.
Well, Mr. Hawkeye in the chat there, Russell, is calling you Mr. Doctor many times. So there you go. He's giving you that doctor appellation, even if you haven't earned it yet. And, of course, we'll be back next week, listeners, with more Vol Views. If you are listening live and you're saying to yourself, hey, I like myself a little bit of that Bitcoin talk. I would like some more of it, as well as perhaps some commodity vol, crude, all the other stuff that's lighting it up in the commodity world. Stay tuned. We'll be back in about half an hour for TWIFO. In the meantime, we'll beam some goodness into the live stream for you. Maybe some playbook and a few other fun things for you. So stay tuned for that. We'll be back in a half an hour for more TWIFO. If you can't join us then, of course, then we'll see you back next week for more Volatility Views.
Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.